Hello everybody, welcome back. It's Ed Ponzi from edponzi.com. Thank you for joining us once again. There's so much going on, so I got to tell you right away what's happening. Okay, first of all, big thing. Monday was a very crazy day in the markets, and I have to tell you, it's the kind of day, it takes me back. It takes me back to 2007, 2008, that kind of a day. It was really ugly out there. I haven't seen it like that in quite a while, okay? I compare it to this, right? You ever stand in the ocean? You're standing in the ocean, you're about waist deep in the water, and you're looking around, and you know, it's not too bad that the sun's out, a few clouds, birds are flying by, but man, underneath the surface of that water, there might be a really strong current all of a sudden. You get pulled into that current, and you're like, whoa, that's not right. I know that feeling, that's a dangerous feeling, okay? That's exactly how I felt in the market on Monday, okay? Here's why. If you take a look at any of the candles on either the S&P 500 or the long bond, 30-year bond, 20-year bond, TLT, okay? If you take a look at the Monday's candle on the dollar yen, huge candles that wipe out a month worth of activity. Right? S&P had all these little candles, mostly green, trending higher, but you notice that the bodies of the candles got smaller and smaller, and then it's sort of like you're just floating along in your little hot weather balloon, right? What do they call those things? Hot air balloon, right? You're floating along, and it's a beautiful day, and you know, the birds are out, the clouds are out, you know, there are a few clouds over there. It's like, then suddenly, everything turns black and the wind is blowing and you're like, whoa, I'm in danger. Okay, so this is a little bit of a scary thing that happened on Monday. So let me just tell you this. I was very bullish up until Monday. Okay, Monday I closed out a lot of my long positions. I did very well with January and most of February, you know, buying some strong stocks, using the techniques that we teach in the swing trading course, okay? Using the 2020, using the blaster, using these methods, all right? And I know a lot of you are using them too. Now, I find myself looking for bearish opportunities, okay? I find myself looking for stocks that are breaking down or about to break down in weak sectors because I don't want to be out over my skis. I don't want to be too bullish, okay? That can be a little bit scary. At least right now, okay? Maybe it was appropriate in January. Maybe it was appropriate earlier in February. Now, I definitely have concerns. Now, the press, they're going to say it's Bernanke's fault. They're going to say it's the sequestration. They're going to blame the election in Italy. And the truth is, look, they have to come up with some kind of an explanation. But if you look at the move in the British pound, you look at the move in the dollar yen, you look at the move in the S&P 500 or in the long bond, it looks like panic. It felt like panic. It felt like money was running away from stocks and running, not walking, running into bonds, okay? And the currencies that got stronger, like the US dollar and the Japanese yen, they're the ones that get stronger when people are what? When they're afraid, okay? So this could be the moment where we change from being bullish to being cautious. So I want you to be very careful about being too far out over your skis. Don't be 100% long. Maybe look for some shorting opportunities too. Maybe look for some charts, you know, some weak charts, so that just you have something in your back pocket just in case it's time to sell short. You'll be ready, okay? Be ready for anything, okay? We just went from cruise control in January and early February to being on red alert. So be careful out there.